easily get it from the current asset. But those fixed assets, they are intangible assets that cannot be disposed within 2 or 3 days. So it takes time because they require huge amount of money. So now we have the closing stocks, which is the stock, because you know closing stock at the end of the day, it is an asset. It is the left stocks that are not been sold. So it becomes an asset to the company at the end of the day. So that's why it is coming to balance sheet, because balance sheet shows the clear picture of a business. We call it financial position. That means the worth of the business can be seen or ascertained in your balance sheet. So the way what company looks like, the profit, the assets that they owe, the people that they are owing, everything will be stated in the balance sheet. Now we have remember we have insurance prepaid. Insurance prepaid is 40 naira, and you see it is also appearing and adjusted cash additional information, so it has to be treated twice. Now we've adjusted for debtors in the question in the our working, so it will also appear here in the balance sheet. Less bad debt, exactly the way you prepare it here, that is also the way you prepare it in your balance sheet. So this 1,000, and that is a 5080. Then you less provision for bad debt, that is a 508. We have a 4572. Then less provision for discount allowed, so that is a 914. So that gives you 3658. Then we have a accrued interest, or we call it arrears or arrears, interest arrears. So we call it accrued arrears. You know, we have it here. You can see here accrued interest that was received, which is an accrued. So that is a 10 naira. So let's add this together. If you add it together, you see that you get 37,750 at the end of the day. So you must get the side of the asset and the side of the capital must be equal. If it is not equal, that means there is a problem in maybe adding your figure, or there are items that are supposed to be included which is not included in the question. In as much your trial balance is balanced, then your balance sheet also must be balanced at the end of the day. So that is how you prepare trading profit and loss account and balance sheet as at that date. Theme 5, which is a control account. What is control account? Control account is the memorandum account into which are considered in totals the various accounts amount of transaction which has been debited and credited in details to individual ledger's account. It can also be called total account or self-balancing account. In the question of maybe WAEC or NECO, they can say control account is also called total account, or you can give them total account or self-balancing account. Now, when we are talking about control account, we are talking about debtors and creditors account. It is just an adjusted account in order to know the totals of debtors and creditors that transaction you make during the year. What are the uses of control account? Why do you use control account? We use control account in preparing so many things. We use it in the incomplete record, non-profit organization. And what are the uses of control account? you use this for location of errors. We use control account for location of errors. Then the second one is to prevent frauds. In adjusting your debtor account, you discover the fraud that is being perpetrated by the worker. So we use this to adjust our debtors to no balance debtors or creditors at the end of the year. And you know something, under classification of account, we have personal account and we have impersonal account. Under personal account, you know, we have the debtors account and creditors account. So we use this to adjust our debtors and creditors at the end of the year. So it helps to prevent frauds. Then it aids management control. It is used as a means of control. It helps management to control for decision making and any other thing. And you know, when it helps management in control in the sense that when management determine or adjust for the debtors, they will know who is owing them and who the company is owing. So it helps company in a control aspect. And the fourth one is the ascertain of debtors and creditors, and that is the main reason why we are preparing debtors and creditors account. You adjust for the debtors, and who are the debtors? The debtors are the people that owe the company, and who are the creditors? The creditors are the people that the company are owing. So they make adjustments for that in order to get the balances of each account, which is a debtors and creditors account. Then the fifth one is easy detection of missing figures. It is quickly to identify any missing figure that occur. So with the help of control account, it helps you to detect the figures at the end of the day. And the last but not least is it saves time. You know, after you have adjusted, then it helps you in preparing a quick account. So it helps you save time, and it helps an accountant to do justice to his account. After you have prepared the control account, then the figures that is needed will be extracted from the control account. What are the classifications of control account? It is classified into sales ledger control account and purchases ledger control account. Now, another name for ledger control account, you can also call it sales account. But before we go there, let's quickly do sales ledger control account. Now, what it is? Sales ledger control account is sometimes called total debtor control account. I think it is control account for sales or debtors ledger. You know, when you make sales, those people that owe you from the sales, you know, sales, credit sales, and then note this. You know, I said the other time that anything that has to do with card sales will be posted in the card book. But any sales transaction that you made on credit, that is what we adjust for what? Control account. So that means if you make a credit transaction, maybe you sell your goods to the customers on credit, then that means you are going to prepare debtors control account. That's what brings us. So anything that has to do with that, we prepare debtors ledger. So you can call it a sales ledger or debtors ledger. Now we'll be talking about purchases ledger. You know, we have two types of ledger. We have ledger, sales ledger and control, purchases control. Purchases is referred to as a total creditors control account. It is the control account for purchases or creditors ledger. Why are we preparing purchases ledger? Is that to adjust for the credit, to adjust for the creditors. That means when you make a purchase on credit, you are owing someone, a company is owing someone, likewise somebody is owing the company. So after, that's why control is called total account. After you must have adjusted that, then you make the posting into the balance sheet, which can also be called financial position. And that's why debtor is called as an asset, while creditor is a liability. Now, we'll be talking about entries to be posted on the debit side and credit side of sales ledger control account. You know, I told you that Ledger is a permanent account, and it is associated with the double entry principles. The way we prepare the other account, that is exactly the way we also prepare the sales account. This is a ledger which must follow the double entry principle rules. Now, this is a sales ledger or debtors control account. Now, on the debit side, what are the items that are supposed to be posted to the debit side? We have opening debtor, and when we're talking about opening debtors, it is the debtor of the last month, which is the close. You know, we have the opening debtors and closing debtor. The debtor of last year, we bring it to the following year, which is the current year, and then the closing debtor of last year will form opening debtor of the current year. That means to know the total of people that are owing you last year. After you must have prepared your account, then you now transfer it to as opening debtor in the following year. Now, credit sales. Credit sales is also on a debit side, because you know I told you the other time that when you are preparing your control account, that means something has involved credit, not cash. When there is credit, when you make credit transaction, then there is need to prepare a control account. Like other companies, they prepare it in an audit firm, and any other organization, they prepare for the debtors account. Then we have interest charges has to be on the debit side. We have a dishonor check. We have a dishonor bill. We have carriage outward. We have a discount disallowed. We have debit note issued. Then on the credit side, we have, you know, it is an adjustment account. You can also call it memorandum account. So it's like you are adjusting. This side are the things that your customer owe you, and at the end of the day, the credit side is that when they paid you, it reduces their debtors. So at the end of the day, after they must have paid out of the bills, out of the owings that they owe you, maybe your customer owe you, they pay from it, it reduces their debtor, and at the end of the day, you get your what we call closing debtor. You transfer it to another